Welcome back to the channel and welcome back to another weekly price action review or recap, if you will. So, not going to take too much of everyone's time on this one and hopefully keep this one short and to the point. But I think one of the key takeaways initially as we delve into this week's price action review is pretty much price action was clean and was simple, but that doesn't mean that the market doesn't lay landmines that one can fall into if you are not either sticking to your rules, you're not really taking the time to analyze the market correctly and trying to understand what the market is trying to do in order to, whether it's generate liquidity, catch traders on the wrong side of the market, etc., etc. The list goes on. And so it's important to ensure that you are aware of these landmines and then you essentially navigate accordingly around to find your high probability setups and so on. So in terms of high time frame narrative and so on and so forth, this week kind of delivered as outlined, and we're going to go and delve into that now. So we have the weekly chart up, and as we see it, the highs, I'd outlined how the weekly time frame remained bearish, and that's largely in part with price trading to and through this old low here, and we closed below, and that essentially gave us the indication of where the high time frame drawn liquidity was. So we obviously had this high time frame crack in correlation at the highs, followed by this high time frame displacement lower. Okay, and then furthermore, I noted this SIBI in here. Now I haven't marked it up on the chart. By all means, it would have been there during the week in terms of my analysis, but it's not necessary for this point. So we had this unfilled SIBI weekly up here, and that was supporting the idea of lower prices, essentially indicating that the market is weak, because if we see an unfilled, certainly if we see an unfilled imbalance and the market trades to and through a key liquidity pool, well, that is indicating that the market's extremely weak, and in all honesty, there's no real reason to trade up into here. So essentially this becomes a breakaway gap up here. So with that being said, and how the market had closed below here, the anticipation this week was a continuation of lower prices, and that brought into the crosshairs this old low weekly down here as the high time frame drawn liquidity for this week, or whether you want to call it the near-term drawn liquidity. But ultimately that's what, in my opinion, before the week, in terms of my analysis, what the market was drawing towards. And the question would be, how was it going to do that? So there's the essential framework from a high time frame drawn liquidity. So let's drop down to the daily time frame and see what else we can frame from this week's price action. So I'm going to enlarge this like that. Okay, so already you can probably see some key elements to this analysis. I'm just going to take a quick slurp of coffee. Lovely. Okay, so following on from the weekly time frame commentary, where we outlined the high time frame drawn liquidity, the anticipation of a continuation of lower prices, we can see how the market opened here. So there's the weekly open. The market opened and immediately repriced lower on Monday. Now, as some of you who may have watched my previous content and so on, I don't typically I don't trade Mondays. I prefer to see how Monday's price action plays out, because then that kind of gives me a bit of a feel in terms of what is likely to ensue for the remainder of the week. It just helps me formulate an idea in terms of what the market is likely to do. So, as I said, the market repriced lower on Monday, and then that repricing lower continued on Tuesday, where ultimately we saw this volume imbalance form, but the market continued to reprice lower, but it failed to purge this old low weekly, and where we see this rejection. So following Tuesday's price action, the market formed this daily SIBI here. Now, naturally, I'm looking at that and saying to myself, heading into Wednesday, if the market trades to and through that SIBI, well, then that would indicate that we're likely going to see higher prices, or certainly to a premium of the current daily dealing range. Okay. However, the market traded higher coming into Wednesday. The market traded higher into that SIBI daily, where we noted this high time frame cracking correlation here, and we can see that in more detail when we drop down to the H4 time frame. Furthermore, I'm noting, certainly as we're coming into Thursday, but for the purpose of Wednesday, the bodies of the candles are in nowhere near any close proximity of closing inside of the SIBI daily. So again, that is supporting the idea of the market being extremely weak and likely to trade down to the near-term drawn liquidity, which is the old low daily. So let me just re-emphasize that point before we move on, is the fact that the market has traded up into the daily imbalance, where we've seen this high time frame cracking correlation. So by distinction, the low that was formed, so this low here where the old low daily is, the low that was formed would be the natural near-term drawn liquidity if this high time frame cracking correlation holds or is confirmed by, in my approach, would be by some lower time frame confluences. So naturally that becomes the near-term drawn liquidity, and the overall high time frame drawn liquidity still remains the old low weekly. And because they are in relative close proximity to each other, you can assume that should the market reprice lower, it's likely going to purge both of those liquidity pools. Okay, so ultimately the market does reprice lower, following the rejection on Wednesday, then the continuation lower on Thursday. Reprices lower to the high time frame drawn liquidity, so it purged both liquidity pools. However, at the lows following this purge on Thursday, we note how, number one, the bodies of the candle for Thursday does not close below the old low daily or the old low weekly, and also we see SMT relating to this daily time frame with NQ, and as we all know, SMT with NQ is relatively high probability. So, you know, if you get SMT with YM, I still believe that is credible. However, if I see SMT with NQ, that for me is the strongest form of SMT between the IFT assets. So I'm going to be paying close attention to that. Another coffee slurp. Beautiful. Okay, so we've traded below the true month open. It's traded lower, it's purged the liquidity below, and now we've seen this high time frame SMT monthly cycle, if you will, but it's also essentially the weekly cycle as well with NQ. And this supports the idea of a near-term retracement back into the weekly range, if confirmed by lower time frame confluences. But ultimately, we know that the market rejected here based on the confluence, some of the confluences that I've outlined, and it ultimately reprices higher, targeting this volume imbalance as the near-term high time frame drawn liquidity, because we want to see that this volume imbalance be filled, right? So that would be the near-term drawn liquidity following this retracement. Okay, so we've got the scope of everything that transpired. We're going to just delve down into the 4 hour now. and we will touch on the hourly as well. Okay, so let's sort of get into a little bit more of the nuance of what transpired. So there's going to be a bit of repetition here, but hopefully it's worthwhile. So again, as detailed on both the weekly and the daily commentary, the anticipation was for lower prices down to the high time frame drawn liquidity, in this case the old low weekly. So we've outlined that's where we think the market is going. Okay, so we understand how the market repriced lower over Monday and Tuesday, forming the old low daily and also creating this daily SIBI. But what we also have is an overlap of at the daily SIBI of the SIBI H4, which is important. And also bearing in mind that this is CPI here, okay, which we'll see on the hourly time frame. Okay, so again, we noted how the market ultimately traded lower, failed to purge the old low weekly, before retracing higher back into the SIBI H4. So the key thing to take away here is we had the weekly open, market trades down on Monday. Look at all of these imbalances that are being formed. So again, it's an indication of the market being weak and ultimately going to be targeting here. Now, when we see this retracement back into this SIBI here, we are ultimately looking for this SIBI here to hold. We want to see the SIBI hold because that would be a true indication that the market is going to target this old low weekly. Okay. So the market reprices lower, purges this old low H4. Let me just bring this out here, where we see this SMT, high time frame SMT, with NQ. Now, this is not one that I can ultimately utilize or would utilize, but it's important to note that it's here. I would have needed to see more in terms of framework in order to look to engage in any of this here. So I was quite happy to leave this alone. Okay, but ultimately the SMT occurred here. What is that SMT going to tell us? That the market is likely going to retrace back and target potentially the previous daily high. Okay. So the market continued higher, trading above the true week open. So that's an important confluence as far as I'm concerned. Trades above the true week open whilst also purging this previous daily high. And trading into the overlap of the SIBI daily and the SIBI H4. So we have a number of confluences. We've had liquidity taken. We've traded into an imbalance. This is the first imbalance, which is important. So we expect this to hold if we're going to target the old low weekly. And we have high time frame cracking correlation in the form of high time frame SMT with YM. Okay. And this occurred, as I said, at CPI. So again, supporting lower prices. The market rejects aggressively. Again, note the bodies of the candles. Look at this, a large manipulation wick to take out liquidity, trade into the imbalance, and then rejects, indicating lower prices, or certainly weakness in the market. Okay. So the market rejects, supports lower prices. The market reprices lower, as we can see, and ultimately forms this previous daily low, okay, before trading back into the range. So to note, and we'll sort of touch on it briefly on the hourly chart, this was my primary trade of the week following CPI. Okay, and it's slightly unusual for me to trade CPI or trade on CPI day, but ultimately, you know, I was in front of the markets. The market presented my model and setup, so I took it. Okay, so market trades back into the range. closes out Wednesday, then we have this sort of consolidation of price action whilst also trending lower. Market trends lower, ultimately then rejects far more aggressively, reprices lower, purges the old low daily and the high time frame drawn liquidity in the form of the old low weekly, essentially to meet the weekly objective. Okay, as the market trades through and closes out, I note this high time frame SMT relative to the daily time frame, but we can see it more clearly here. Now this would be SMT as well, relative to the weekly cycle as well, if you will, but the higher cycle would be the monthly cycle, so that's what I've referenced here. So we get this SMT and the market begins to reprice higher, ultimately leaving this BISI, so bullish fair value gap, if you will, and also closing above this down close large volume candle, forming the high probability H4 order block. Now, why is this important here? Reason being is this order block occurred towards the end of Thursday. Therefore, if I'm going into Friday, I need to see the highest form of confluence to support the idea of higher prices, and that would be a 4-hour order block. Okay, and it ultimately means that something can be framed off that, which we'll touch on shortly. So what does this also symbolize? That traders, because it was a large volume candle, that traders have been caught offside, essentially trying to sell this breakout lower. So now they're caught offside. The market has retraced back, confirmed the bullish order block, and support, coupled with the BCH4 indicating a near-term move higher, especially after we have purged the high time frame drawn liquidity. Okay, so upon the confirmation of the bullish high probability order block, the H4, the market confirmed, as I said, the BISI, came back, retested the key price level of the order block, and then the market repriced higher, purging the old high H4 and continuing to the volume imbalance where it closed for the end of the week. Okay, so that is the H4, H4 analysis. So if we're going to drop down to the hourly, let's get this. Let's get what we can see. Oh. Okay, and let's bring this down a little bit. Okay, right, yeah, I think that will do. So I'm just going to touch on a couple of things here. I'm not going to go into the whole ebbs and flow of the week because we saw that on the H4, which I think the H4 is probably the most significant when sort of looking at the weekly price action as a whole. But I'm going to just delve into a couple of things here in terms of the hourly. So obviously, I've identified and annotated on the chart the high impact news drivers here. If we will, we could change that to CPI. That would have been PPI and then so on. Okay. So ultimately here, let's just look at Wednesday. So the market opened. We have this consolidation here before it forms the London low. Then the market ultimately reprices, well, in fact displaces higher. So we have the BCH1 there, displaces higher. Okay, and it continues higher, and then we have the CPI news. So CPI news, we have the central bank manipulation. The market reprices higher aggressively, purges the New York PM session high from the previous day, but we're looking at the previous daily range. Okay. Continues higher into, so above the true week open, purges the buy side liquidity pool for the New York PM high, purges the previous day's high, and then we get the high time frame SMT here with YM before we see this rejection. Now, ultimately, I looked at M15 and M5 lower time frame confluences within here to support to give me the confirmation of lower prices, and ultimately I engaged the market somewhere in here, targeting this old low, but ultimately it delivered to 2.5R, so that was enough for me. So that was essentially trade one. Now, an important note here is, as I went into Thursday, I believe, the market essentially formed some form of high time frame SMT initially here. Now let's see if I can identify when it was, just because I think this is an important for, you know, for some of you to take away. It may help, you may not care, but I think it's important nonetheless to. So what I'm going to do is just let me see if I can just identify. I want to say. Yeah, I think it was. Yeah, I think it was here. I'm just going to mark it in a. Let me just use this. So coming into here, so this is this is going into the New York PM session. So what you would, so if we go back to the hourly, because it will be far easier. Do bear with me, folks. Let me just get this down like that. Okay, right. So as you can see here, we'd have had the news, and I was looking at this SMT here to potentially, you know, trade higher. However, there was a couple of key things here which is important to take away, and this was my takeaway from the week. So by all means, if this helps you guys, then, you know, please look into it. I'm just going to jump back out to the H4 time frame, and it'll allow me to explain. Okay, so this move here, why? So I took a small loss, nothing major here. My main profit was from this trade here, and this was just a small loss. But why take this loss? What key things did I take away to add to my, you know, my analysis to improve how I view the market? Well, bear with. Okay. So the first thing is that we obviously had this SMT up here. Now, one of the things that I look at when I'm framing a trade is there a H4 aligned inflection point that the market can tap? So what do I mean by that? Is there a liquidity pool that hasn't been tagged or purged yet? Or is there a H4 imbalance that hasn't been tagged or purged yet? So the thing to note here is, at this point here, the higher time frame drawn liquidity has not been hit. Furthermore, because we had this SMT up here, that in itself meant that this old low is the near-term drawn liquidity. That hadn't been hit yet. Furthermore, we had no H4 imbalances, or I say imbalances, aligned imbalances or aligned liquidity pools above the market other than trading back up into here, which is very unlikely because these lows haven't been hit, been purged. So what were the key things for me to take away? Was one, we had SMT up here in the daily imbalance, supporting the idea of lower prices. There was no displacement lower. No displacement lower. Why is that important? Because if there was displacement lower, that unfilled imbalance that could have formed would have been the target for higher prices before the continuation of lower prices. There was nothing here. So therefore, if you've got no target and you haven't met the high time frame target, then the likelihood is going long is not a good idea. Okay? There was no align. So yeah, you might look at this and go, okay, well, we've got a H4 liquidity pool here. It wasn't aligned. When I say it wasn't aligned, that same same liquidity pool was not seen on NQ or YM. Therefore, it's not important. And as I said, the high time frame drawn liquidity had not been met. So this is a trap that the market was setting to get traders caught on the wrong side of the market to indicate to them that, you know what, the market's bottoming out here. However, we had relative equal lows, no imbalances on the way down that could be targeted up before the market. So what am I saying? Let me just take the magnet off just for a second. Okay, right. So we get the pen. If actually not the pen. Let me get this. So let's just assume we're just going to make an assumption here from here. Say we had this imbalance, this H4 imbalance here, as the market repriced lower. What I'm saying is, because of this high time frame cracking correlation here, which meant that this area here was the high time frame drawn liquidity, seeing this SMT here, this would have been plausible if we were saying we want to take this from here, trade up into here, and then as a target, as a target for the market to then trade down to the high time frame drawn liquidity, which is ultimately here. Okay, that would have been plausible because you have the H4 inflection point above the market where the market could potentially reverse from and trade lower. Okay, so I'm just going to get okay, and because we didn't have that, ultimately means that the market is still weak, and it's likely going to draw, if you think of a magnet, to the high time frame drawn liquidity before potentially any move higher. So then you could say to yourself, okay, well, coming into Friday, why would you have looked at this higher? Now, this was a potential move for me. I didn't take it. It was Friday. In the end, I kind of felt that, you know what, I've done pretty well for the week. I'm gonna leave Friday. But why would this have been viable and not this here? Well, because we had the high time frame cracking correlation below the true week open. We had the confirmation from the previous day of the H4 order block. So now we're looking for a model inside of here. So let's just drop down to the hourly because it'll become a little bit more clear. So in terms of, this is one of my models. Okay, so let's just look at this. So H4 order block was confirmed. We had the BISI H4 confirming an intention to see higher prices. Then we had this cracking correlation here at a time-based liquidity pool. The market had not. So if you imagine the market's traded up, come back, it hasn't taken out this H4 inflection point, which is the old high. It's then traded low, created this low time frame SMT inside of the high probability H4 order block. That sets the stage for higher prices, targeting here and then potentially higher. So this was something that I could have taken, but I decided not to because I was content with enough. So I took a number of key takeaways from the week. That was the key one of the main priority ones that I took, which I've updated my analysis with in terms of what to specifically when you're looking for a counter trend trade against the high time frame order flow. That's what's important about this thing here. Okay, so I'm going to leave this one here. Hopefully you've taken something away. Do note down your key takeaways and make any amendments and refinements to your trading models and your trading plans. And I'm going to leave this one here. Hopefully you've enjoyed, taking something away, something positive. If there has been and you'd like to comment, please do. Really appreciate any comments that I get. And if you find the channel informative, or my videos informative, or you like the way in which I view price action and so on, please be sure to subscribe to the channel. Would really appreciate that. So on that note, I'm going to leave this one here. Hopefully you've enjoyed it, and I will catch you guys in the next one.